What is the purpose of an appraisal? An appraisal is simply used to estimate the value of property. To figure a property as far as value is concerned, there must be 4 economic characteristics for anything to have value. They are as follows. Number 1, we need to have utility. Utility means that the property must be useful. The second characteristic is scarcity, which means there must be a limited supply. The third characteristic is demand, and demand means someone must want the property. And then finally, for anything to have value, number 4 is transferability, which means the seller must be able to transfer the property to the buyer. Our acronym is USDT for Uncle Sam Demands Taxes. Hopefully you can recall utility, scarcity, demand, and transferability. The value of real estate is affected by supply and demand. The biggest characteristic that will affect value will be local economic conditions. People go where jobs are, so the local economic conditions play a big factor in the value of real estate. There are 2 types of depreciation that we need to talk about. The first one is called tax depreciation, which is for investment properties only. Let's contrast tax depreciation, which is for investment properties as a tax write-off, with value depreciation. Value depreciation simply says something goes down in value due to age and wear and tear. What goes down in value due to age and wear and tear ultimately is called the depreciable base, which are the improvements only. The improvements would be a house you built on land, for example. In other words, all that depreciates due to passage of time will be improvements to the property. Again, houses, buildings, and structures. In other words, land never depreciates. Land does not depreciate simply due to passage of time. Land also is not depreciable under our tax code either. When we take depreciation into account in figuring the value of property, we will always use the straight line method on our test. The straight line method of depreciation means we depreciate equal amounts each year. That is opposite of appreciation. When a property goes up in value, mathematically we have to recompute every year how much the property does go up in value. Let's discuss 3 different principles of value that will affect the value of real estate. The first thing an appraiser will consider in doing an appraisal on a property, for example, is a concept called highest and best use. Highest and best use deals with what a property can be used for to produce the best income or the best value. Would it be best used for commercial or maybe residential? A second principle of value is called substitution. Substitution says that a property is only worth what I can get something else for just like it. In other words, we look at comparable properties to estimate the value. So if a basic 3-bedroom house sold for $100,000 last week, a very similar 3-bedroom house on the same block should sell for roughly $100,000. That is the principle of substitution. Conformity deals with the issue of property should conform to the neighborhood for the best value. In other words, don't overbuild for an area. One other item to think about is called anticipation. Anticipation says we look to the future for the value. So if we anticipate an airport going in and being built brand new, the properties around that will probably become more valuable due to what is called anticipation. The best way to value residential property or vacant land is with what is called the market data approach, which is looking at comparable properties. The market data approach is based on the principle of substitution. Substitution again says that a property is only worth what we can get another one for just like it. When a licensee goes out to list a seller's home for sale, the seller will typically ask for an estimate of value. The licensee will look at comparable homes in the neighborhood that have already sold that are similar to the seller's property. No properties are alike, so we need to make adjustments to the comparables to basically see how they compare to the seller's subject property. Then we can estimate the value. Appraisers, by the way, never average comparable values together to come up with an estimate of value for our subject property. The appraiser, just like a licensee, will make adjustments to the comparables, pick the comparable that is the most similar to the subject property, and then come up with an estimate of value. Finally, as licensed real estate agents, when a seller asks for an estimate of value, we typically do what is called a competitive market analysis, or CMA. That is where a licensee will show the seller what properties have sold in the neighborhood that are similar to the seller's property, what properties are currently for sale, that's the competition, and what properties have not sold, which would be the expired listings. By looking at the solds, the for sales, and the expireds, a licensee can give a seller an estimate of range of value for the seller's property. The cost approach is another approach that we can use in estimating the value of property. The cost approach is used on special purpose properties, such as churches or schools or synagogues or hospitals. It's also used for new properties as well. There are 3 steps involved in the cost approach. Step 1, we have to estimate the current replacement cost of the property. Step 2, we then subtract for depreciation based on how old the property is. And step 3, we finally add the current land value, because recall, land never depreciates simply due to passage of time. In step 1 with the replacement cost, we typically use the square footage. The length times the width will give us a square footage, and we always use outside dimensions for square footage. Then we can take a square footage amount times the cost per square foot to estimate what it costs to rebuild the property as if it were brand new. If the exam were to ask you for cubic footage is length times the width times the height. So square footage again is length times width, cubic footage is length times width times height. Once we get the replacement cost as if the property were brand new, step 2 is then to subtract for depreciation. Because the property we're looking at is not brand new, it might be 15 years old. There are 3 things that cause depreciation. The first one is called physical deterioration, which is basically peeling paint and sagging floors. That would cause a property to suffer in value. Number 2 is called functional obsolescence. Functional obsolescence means we have problems inside the property lines, and the property doesn't function the way modern properties do. In other words, it is outdated. It might have window unit air conditioners, things like that, which would make it functionally obsolete. The third thing that causes depreciation is economic or external obsolescence, which are problems outside the property lines, such as having a house next door to a sewage treatment plant or having air pollution that invades the property. Those are problems outside the property lines. And finally, step 3 is to add in the current land value. So the replacement cost minus depreciation plus the current land value would give us an estimate of the value. The income or capitalization approach is best used on income-producing properties, such as apartment complexes and shopping centers. The way we use the income approach is as follows. We start off and estimate the potential gross income of the property. Then we subtract out a vacancy rate. Then we subtract out the operating expenses. And what's left over is called the net operating income. Once we arrive at the net operating income, we then divide the net operating income by a capitalization rate, which is basically a rate of return on the investment, and that would give us an estimate of value for the income-producing property. So once again, net operating income divided by a capitalization rate would give us an estimate of value for the income-producing property. Regarding the appraisal process that an appraiser goes through, the key things to remember are as follows, and that would be our 3 different approaches to value. The market data approach is best used on residential and vacant land. The cost approach is best used on special purpose properties, again, churches, schools, hospitals, and the like, and or new properties. And finally, the income or capitalization approach is best used on income-producing properties, such as apartment complexes or shopping centers.